Hey, good morning, everyone. Welcome to the Macro Snapshot. We are Friday, January the 30th, so it's the end of the month, 2026. Okay, so the big news which just came across the wires was that Trump's just nominated, as had been sort of semi-leaked over the last sort of 12, 24 hours, Kevin Walsh to be the new Fed chair. So you see here, here's the tweet from Trump, which came out about 15, 20 minutes ago. So essentially here, they just have his resume. And it says, I've known Kevin for a long period of time and have no doubt he will go down as one of the great Fed chairmen. On top of everything else, he is handsome. He's central casting and he will never let you down. We shall see if Trump gets disappointed. One thing to keep in mind is that generally, if you look back at historical comments of Kevin Walsh, he's been relatively hawkish in the sense that if you go back to his comments when he was on the board of governors, back like sort of 10 years ago or so, he was actually quite hawkish in terms of, maintaining the sort of focus on the inflation part of the mandate. Secondly, in terms of business at the Fed, he's been on record as saying that he's not a big fan of having a huge balance sheet and prefers to have, all things considered equal, a smaller balance sheet. So if you look at that, that is a little bit hawkish. I mean, on the other hand, he is quite well respected in the industry. He has, a very good CV here. He has a lot of experience at the Fed. So in a certain sense, it's market friendly. He's not a wild card or anything like that. But on the other hand, he is on the slightly hawkish side of things. Having said that, a couple of points. Obviously, he's been talking to Trump, is being interviewed, and presumably in that interview process, he is sort of given Trump the sense that he does agree that interest rates should be, at least in some shape or form, a little on the accommodative side. We shall see. Secondly, and I don't know if this is important or not, is that he's considered by the by Trump as a bit of an insider. Keep in mind that Kevin Walsh is married to the heiress of the Lauder cosmetics fortune, a very, very wealthy woman. And her father is very close to Trump and actually is considered one of the people who has been sort of whispering in Trump's ear about, sort of acquiring Greenland and whatnot. So the point is that Kevin Walsh is considered a friend of Trump. He seems to be, close to Trump and is considered an insider. So it's going to be interested. The Bloomberg headline we just saw said that it's a reinvented Kevin Walsh. The implication being that, his past sort of comments perhaps on inflation and on the balance sheet, maybe he's going to be a little bit more dovish this time around because he seems to, his life has changed in the last 5 or 10 years in terms of his personal connections. We shall see. So let's have a look at the market reaction here. I mean, the market reaction, as the leak on Polymarket and the betting markets last night. So if we actually look here and just to see what's going on. Now, it's possible yesterday that the markets, I mean, we did get basically a bit of a sell-off, pretty volatile day yesterday in the US equity space. So we saw that the VIX actually spiked up to almost about 20. It's subsequently come down, but it's still at quite elevated levels. If you see here it's almost at 18. So even though it's not at yesterday's highs, it's still relatively high. And so therefore we can potentially expect, as I just said, it's January the 30th here, so it's the end of the month. Could be a little bit of volatility sort of happening in the equity markets today. And of course, we also have the potential for some kind of weekend military action. Who knows, over in Iran. Added to that, I've been saying that the move index of bond volatility has been at low levels. Look at this. Suddenly, in the last couple of days, last 48 hours, you see that bond volatility is moving up. If we look at also the TLT volatility, that's also going up. Oil volatility is high. You see gold volatility, no surprises there. Gold volatility is super high, and obviously our dear old friend silver. So all across the volatility space, all of the indicators are more volatile, as showing high volatility. So we can expect some kind of well, I hate to use the word again, volatility, basically. Okay, so if we look at the S&P 500, there was some sort of talk that the rumors that Walsh was going to be nominated caused a little bit of negativity yesterday, just on the fact that he's supposedly a bit more hawkish. The dip was bought. And we had a nice recovery. We had good Apple earnings last night, earnings call. They did pretty well in terms of the iPhone, much better than expected over in China. So, quite a lot of positivity about, one of the large caps, obviously Apple. On the other hand, the market is still a little bit skittish. So this is still, I mean, just from a technical perspective, if we break this down to the 4-hour chart, just to get a little bit sort of to zoom in here a little bit. And again, this is a short-term chart here. But if we just sort of start looking, we can see that, just on what happened. So you see that yesterday, it did sort of fall off. The dip was bought, and now again, just on this 4 hour chart, we can see that the dip was bought. Yesterday morning around about the 6,900 level. So, so far so good. So what would we have to see today for the bulls and the bears? So again, as I always like to do, I'm just going to put it on a short-term fib. Now, the dip was bought, then it came off sort of overnight in the European session. I don't know if we're worried about geopolitical risk in Iran, about wash. So now really what has to happen, the bulls, they've bought it again. They need to take this back above this level here, which is approximately the 61.8 fib retracement at about 69.93 or so, even up to about 7,000. So that's sort of fib box there. They need to push higher. So that's what I'm going to be looking at, is just that little box, as I say, about 69.95, 94, up to about 7,000, 7,002. The bulls need to push it high. If it stalls out there, we could be in danger of just having a little bit of a soft price action. But let's see. We just had the Chevron earnings, big oil this morning, which was, I just had a quick look at it, looked quite good in terms of EPS results. They're going to maintain their dividend payments and whatnot. So, the broad equity space doing okay. We can see yesterday, just in terms of the performance, we can see that NASDAQ, similar kind of situation, still not up at its highs. Russell, definitely a bit lower. You can see he got down to sort of a key support level. It was bought. So, the equity is definitely a little bit soft. If we just look at some of the different sort of, different ways of cutting it up, the subcategories, we can see here that the Mag 7, so the big tech companies, they, again, sold off, but have come back. We look at the equal weights actually doing quite well. So equal weights doing pretty well. And if we look globally, we can see that global equity is actually, in a sense, outperforming the US. So I'm not going to look at every single market, but let's say we look at the Euro Stock 600. You can see that didn't have a big sell-off and is essentially looking, pretty healthy on the charts. If we look over in Japan, the Nikkei is looking pretty good. If you look at Brazil, a bit more of a sort of a semi-emerging market, you see that that's still ripping at highs. We see that the Kospi and China. So let's have a quick look at the Kospi in Korea, also doing very, very well. We know that some of the memory chip makers like SanDisk doing well, Hynix doing very well. Samsung doing very well. So all of those semiconductors, memory chips makers are all doing very, very well. And just finally, if we look over at China, the Shanghai 300 looks like it's sort of some kind of bull flag there. I mean, there's a flagging formation here. Interesting. I might have to sort of fake that a little bit, but you could argue that's a bit of a sort of a bullish flagging formation here. So basically, global equity doing pretty well, outperforming the US on the day. And again, that's just the wash comments? We shall see. Be interesting to see if he makes any comments. And of course, he has to go through he's been nominated by Trump, but he needs to go through the confirmation process. And presumably not only the Democrats, but even some Republicans may be grilling him and really sort of drilling down and saying, hey, are you going to be independent or are you going to be a puppet of Trump? So I expect that he'll have the votes and he'll get through because, he's definitely well qualified. So we'll see what happens there. So just in terms of some of the other reactions, if we look at, let's say, the bond market, and I'm just going to put it on the dailies and then go in a bit more granular. If you can see the 2-year yield. So the point is that if we presume that a wash will push for, at least one or two 25 basis basis point cuts this year, maybe even a third cut, you see that the front end of the curve is generally quite happy. You see the yields are coming down on the 2-year. But if we start going up the curve ladder, you see the 5-year, okay, relatively neutral. The 10-year, sorry, that's the 5 here. So the 5 and then the 10. So you see here as we go out and then you go out to the 30. So you can see there has been a bit of a steepening. So as I say, compare that to the 2-year, you see definitely the yields going down. But if we go out to the 30, you can see that the yields, it's a bit volatile, but essentially sort of pushing higher. So we are getting a sort of a bear steepener there. And that would indicate that the markets, the bond markets are saying, okay, maybe he's going to cut at the front end, but this is a guy who potentially might want to reduce the balance sheet a little bit more, which is not great for the long end of the bonds and sort of pushing up the yields. Also, if he's not going to fight inflation as much as is quote unquote necessary, that's not going to be great for the long end of the curve. Now, in terms of some of the other markets here, obviously we've had a big sort of pullback in the metal space. We all know the factors for that. China is about to go on holiday at some point, so maybe there was some profit taking. But the reality is, that, it was very, very overextended. Down on the technicals, there was less liquidity, too much volatility. I mean, if you look at something like the average true range here, which just to sort of push that up, I think I had that average true. I mean, just looking at the average true range here, you see that that's absolutely ripped over the last, sort of couple of weeks. We're now talking, $160 a day, which is very, very high. I mean, if you just look, I mean, if you go back on gold, the average true range, you see here that it's, at sort of almost all time, I don't know if it's all time highs, but, historically very, very high levels. And that just means that, every sort of single institution, I'm not talking about retail, I'm saying every single institution will pull back sizing and take out liquidity and whatnot. So no surprise. So, but it is interesting now, like you see, still see the moving averages doing very well. We got to that 1.618 fib retracement exactly. So if we just remove that just for the time being, we can start seeing what could be an interesting pullback. I mean, I still think the macro factors are broadly supportive. Was this sell-off was this sell-off, to do with wash, or was it just sort of technical factors? Probably a combination of the two. But if we put here a nice little fib, you can see that it went boom exactly. Who said that the technicals don't work? So if we look here at the fib retracement here at 4,940, bought on the 50% fib. So that was the bulls stepping in here. So let's see how we go. As always, what I would say is, it's going to be now interesting just to see what the bulls need to do. So if we put on a reverse fib here, you can see that the bulls need to take that up, basically to, let's say, the 53.60 level, just to confirm that this is not just purely a reactive bounce. So at this point, we have a reactive bounce off the 50% fib. Similar kind of situation over in the silver complex, which obviously is a much, much smaller market. Did I read somewhere it's 11 times smaller in market cap or something? Anyway, the point is that there's less liquidity in silver, like platinum and palladium, which have also seen big sell-offs. Again, similar kind of situation. It got to the fib extension levels more or less, not as perfectly as gold. So now, again, it's a question of saying, what's going to be bought, what's not going to be bought. Again, I mean, it's difficult. I don't know where we should measure this. Maybe a slightly longer term on something like that is quite clean if we measure from, let's say, the 30th of December. And again, okay, interesting, exactly like gold on the 30% fib level. Okay, so always be looking at these key levels, which is 95 bucks and 60 cents. Again, similar kind of situation. You want to see it probably getting up to, the fib retracement level at one, I don't know, whatever that's going to be, 111, 112, something like that. So at this point, is this just simply a reactive bounce? We shall see. It's going to be interesting. As I say, let's keep an eye also on China. We have the Chinese New Year coming up, so market's going to be closed for a week. We know that margins have been pushed up, all of this stuff, which essentially is trying to, calm the market down. And again, if we look at the average true range here, you can just see similar to gold, just, crazy, like $8 a day average move. And keep in mind the average true range for all institutions, that's a minimum as a stop loss, probably even 4 times average true range. So the point is that's just way too volatile for institutions. They reduce the sizing substantially. And as I've been saying for a couple of days, if you look at the commitment of traders report, by the way, that comes out Friday after at about 3 or 4 p.m. So that comes out Friday afternoon. We'll get a more updated one taking us up to this Tuesday. The commitment of traders report had been showing that actually speculators in terms of the futures were not that long. A lot of this was retail driven. So, a rug pull was to be expected. So let's just see how it comes out today. Other thing which is interesting is copper having a big pullback. And again, I don't know if I've been showing the charts, but if you look at all the exchanges like in Shanghai, London, and New York, there was actually the inventories are building up in China, and certain sort of indicators also inventories had been building up in all of the futures exchanges, which actually is a bearish signal. So as the inventories are building in futures exchanges, that's very bearish. It's saying that micro demand is not great. Now we all know, we can all step back and look at the macro, and we all know that the macro long term is that there's technically not enough silver being produced, the electrification of the grids, EVs, all this kind of stuff, data centers. Everyone understands the macro factors are quite positive. But if you look at the very recent micro factors, they were a little bit negative. So, like the precious metals, there's no, so I'm just going to grab some tea here. Excuse me. So just like the precious metals, no surprise that in sympathy, copper has pulled back. Now, again, let's see what happens here. As I said, the Chinese New Year is coming up, so maybe less demand over there. Probably just a market to keep away for just at the moment. It's a little bit high to be buying and selling. I don't really have a strong opinion on selling. What is interesting is to look at BTC. Um, is this purely Kevin Walsh? Kevin Walsh is not particularly on record as being, particularly pro crypto or anything like that. And it's also interesting that the fact that Trump has picked Kevin Walsh. Keep in mind that Trump's personal fortune, a lot of it is tied up in the crypto space. So, the fact that crypto is selling off here. Is interesting, and also that mortgage rates potentially may not be coming down if the market perceives that Kevin Walsh is a little bit too hawkish. So it's kind of interesting. I just wonder if Treasury Secretary Scott Bessent has really been in Trump's ear and basically said, "Hey, you've got to pick someone serious, even if it's not a super dove for the Fed. Otherwise, your chances of winning the midterm election is going to tank." And markets going to tank. So it's interesting there. I just wonder how happy Trump really is with this sort of choice. Anyway, just purely technically looking at the Bitcoin, as I've been saying for a while, the price has been trading sort of fairly heavy, so to speak. One could argue, was this a sort of a bear flag? It certainly seems to be looking that way. The moving averages are all pointing down. I pointed out to this level at about 86,600 here that it had to hold. Small rejection here, and boom, yesterday on the big sort of risk off, it didn't hold, and it actually has pushed a bit lower in the last 24 hours. But we are getting to a point here. Now we are starting to get a little bit overextended. You see here this Fibonacci move. I mean, there's a bit more to go. One could argue that sort of one of the key levels is 80,500 down there. We seem to have had a bit of a reactive bounce there. So for sure, this is starting to maybe run out of steam a little bit, and we are getting down to some support levels. So, maybe it's a chance to sort of take profits for anyone who is short this. And definitely in this sort of pink lilac box here, you go back, there's quite a cluster of support if you just go back to some of these levels here. So definitely these levels around about 78, 79, 80,000 is interesting. So, maybe one wants to be dipping one's toe in here if one is a crypto bull or a BTC bull, as this measured move does seem to be sort of getting towards a bit of an endpoint here. We'll see how the market reacts further today in terms of wash. In terms of a couple of other things, we've got oil stabilizing here. Now, we all know that Trump, there's a huge US fleet with aircraft carriers steaming towards the Gulf states. There's been a lot of saber rattling. Trump is giving mixed messages, saying he has a very large ship, so to speak. The Iranians have been saying, hey, if he does anything, they're going to declare war and potentially attack other sort of US bases in the region. And a lot of the regional partners are saying, whoa, everyone just calm down. So I don't know what's going to happen. Is there a chance of some kind of strike on, in the next few days? Absolutely. There's a very large strike force there. Trump has been quite aggressive. It's clear that he wants to force, he perceives that the Iranian regime is weak because of the street demonstrations. He perceives that this is a good idea to squeeze them, maybe get a better deal to sort of dial back their sort of uranium enrichment plans, their nuclear weapons, they don't have nuclear weapons, their nuclear program and whatnot. And maybe even topple the regime. Is that absolutely a goal for Trump and the Israelis? Absolutely, absolutely. Is that a very dangerous step to take? Yes, we don't know. So the oil market obviously has priced in a risk premium. As you can see here, we all know that's ripped higher the last 3 days. But we got to some overhead resistance, and we're starting to get a little bit overextended. You see here the Fibonacci extension starting to get into some of those targets. So, is it overextended? Yes. I don't know. I think the market today may just fiddle around in this sort of level, 64 to 65 bucks, because no one really wants to be short this necessarily going into the weekend where there is a risk of a strike. On the other hand, plenty of risk premium has been priced in, and probably enough just at the moment, absent any military action, because the fundamentals are still, not super bullish for oil. So it's probably an appropriate level for the oil price just at the moment. Talking about the fundamentals, we do have an OPEC Plus meeting this Sunday, so that's for the March production. And at this point, the rumors are saying that the OPEC Plus has no plans to increase their production, just to maintain it at current levels. So I think oil at the moment will probably just trade in this very tight range, let's say between about 66 and 64 bucks. And we'll have to see if and when there's going to be any military action or maybe a de-escalation. Apparently, some members of the Trump administration are meeting behind the scenes with the Iranians. We shall see. Okay, just finally, guys, just want to have a quick look. Just in general, There's been just want to have a quick look here at some of the FX markets. We had obviously the US dollar just on wash being nominated. The US dollar had support. It was probably had a big sell-off a few days ago, as we all know. So just sort of stabilizing here around about the 96, 97 sort of levels here. So you can see here that the euro again had been strong, just again stabilizing. Pretty key level here on the euro about 119. So not a huge amount to say here. What I will say, just want to keep an eye on the on the Japanese yen. We had Tokyo CPI, which I marked yesterday. We had that last night. That actually came in lower than expected here. So that's going to boost the US dollar again. So that's going to take pressure off the BOJ to hike if inflation does seem to be settling down there. But again, it's just one number. But as I say, quite a lot lower than expected. The Tokyo area CPI. Just in terms of other stuff, there's been a lot of in terms of CAD and the pound. We see the US dollar here has weakened substantially against the Canadian dollar, and actually it's not really having much of a comeback. There's been a lot of talk about tariffs. We saw that the British Prime Minister was in Beijing yesterday. Starmer and obviously Carney, the Canadian Prime Minister, was there, and both of them sort of kowtowing a little bit to China, trying to do sort of separate trade deals, improve relations. And Trump has come back with threats, on sort of says it's dangerous for the UK to be doing business there, and in Canada has threatened sort of tariffs on some of the Bombardier aircraft. As a, I won't go into the details, but basically more sort of aggressive talk coming out of the White House against Canada and against the UK. So clearly Trump, I'm not going to say he's rattled, but clearly annoyed that these sort of allies are sort of, making it very obvious that they're going to court China in a sort of a bipolar world. But the market now, sort of kind of shrugging it off a little bit. And if anything, you see the US dollar actually, remaining very, very weak against the Canadian dollar just recently. And if we just have a look at the pound here, you can see that the pound has been pretty strong, giving back a little bit. So overall, I don't think we can take too much from those comments from Trump just at the moment. Just finally, guys, I think that's about it. As I say, we had Chevron this morning. We had Apple was strong yesterday. Let's just keep an eye on how things go. We do have the PPI this morning, but I don't think it's going to be particularly market moving. So that's it. Let's keep an eye on the headlines coming out of Iran over the weekend and just more market reactions to wash. So let's look at the shape of the curve. Does it steepen? Do the yields on the 30-year go up a lot? And is there generally sort of a bit of a risk off sort of a situation, thinking that maybe Kevin Walsh is going to be more hawkish than the market had hoped for? We shall see. Take care. Have a great weekend, and I'll see you next week with actually, I'll see you on Sunday because we'll have the big sort of macro overview, which I'll release sometime on Sunday. Thanks very much. Have a great day.